I'm Eric. I created San Diego Surfer Investors March of 2010, and this is the first episode of my YouTube videos that I'm going to be making. I'm here to unite people in the surf community that want to make money in the market. My bag is stocks, and I've done really well with stocks. I started when I was 16. I'm 44 years old now, and making money in the market is fun, and it can pay for surf trips. So what I'm trying to do is teach and give you my picks, but if you want to be involved in stocks, you really have to immerse yourself in it and really understand individual companies. And if you can pick the best of anything, and you have a certain knack for that, you'll be able to do it with stocks. And what I always tell people is the first book that got me fired up on this whole thing is One Up on Wall Street by Peter Lynch. It's a book written in simple terms that anybody can understand, and he teaches you how products all around you can give you great investment ideas. And he gives you examples of ones that he found, like when his daughters would come back from the mall, he would get these great investment ideas, and he was the manager for the biggest mutual fund at that time, the Fidelity Magellan, which was a super successful mutual fund that eventually had to be closed off to new investors because everybody wanted a part of his fund. A lot of my ideas come from Warren Buffett. I've followed his ideas and his life, and it's just been a great learning experience to the point, where I got better and better at it, and I would like to share ideas with people. I suggest that you read Investors Business Daily. Investors Business Daily rates stocks, and William O'Neill, the founder of Investors Business Daily, he started the CanSlim method. And the CanSlim method is a very powerful tool that you can use to pick the best of the best stocks. And I can go through the CanSlim method quickly, which I do already on my website, San Diego Surfer Investors. And I'll go through them. The C stands for current earnings. The current earnings is the latest quarter. Companies report earnings quarterly. And the C is for current earnings. How are the latest earnings? Is it bigger than a year ago? Are these earnings greater than the last quarter? You either look at it sequentially or on an annual basis. The A is for annual earnings. Annually are earnings increasing? The earnings are the profits. The profits are the bottom line. When you look at a consolidated balance sheet of a company, the top line is the revenues, which are the complete sales, and the bottom line is the earnings when you factor out all the expenses and advertising and labor and everything. So you need companies that are growing profits. You don't want to get involved in companies that are losing money. And a lot of companies, that's all they do is lose money. They get money from investors, and they can never spend wisely enough and run the company in a way where they're making a profit. You don't want to be involved with companies like that. Sometimes you'll get companies that have great research and development, and they've got some great product that's just coming to market, and they haven't managed to make a profit yet. And then eventually they do come to the time when they're making a profit. That has opportunity. But really, the companies you want to be involved with are companies that are growing earnings, and especially the ones that are accelerating earnings. So the growth in earnings is actually accelerating, from maybe 30 to 50%, sometimes 200, 300%. It happens, and those are the companies you want to be involved with. Anyway, getting back to the CanSlim, N, does this company have new products, new ideas? Is the stock hitting new highs as a result of all these things, hitting on all cylinders for this company? The S is supply and demand of both the products the company makes. Is, supply is being outstripped by demand, and also supply and demand for the actual shares, which is driving the share price higher. L, is this company a leader or a laggard? You want to be involved with leaders in their industry, companies that are the clear leader. I, are institutional investors buying? Are the mutual funds, the hedge funds, the pension funds, all these funds, are they buying the shares of this company? Because those are the guys that move the price of the stock, not us little individual investors, but the guys who come in and decide, we want to buy 5% of the outstanding shares. We love this company, and they just buy big and they drive the price up. Finally, M is for the market. Is the market in a bull mode or in a bear mode? Is the market as a whole, the averages, the indices, are they in a positive time or a negative time? But a lot of times you can have a great company bucking that trend of the market, and actually in a time when the market's going down, your stock can still do rather well. And when the market eventually turns and is going higher as a whole of all stocks, then these companies that are the leaders will actually really perform for you. So anyway, that's the CanSlim method. And if you can't afford a subscription to Investors Business Daily, find someone who's got a subscription and read their day-old papers, I would say, and really keep up with IBD. It's very educational, something that the Wall Street Journal will take a whole page to tell you. IBD tells you in a little quick paragraph. It's like, if you have ADD of any kind, you want IBD, because they get the point across quickly. So, along with that, I'm going to go and give you some of the filters that Charlie Munger and Warren Buffett use when they're picking out stocks, which also are good to mention, because anyway, you should have a circle of competence. If you're a surfer, you know these companies like Quicksilver and Volcom. If you're in if you have a job in maybe pharmaceuticals or something like that, you're going to know what's going on there. If you have a company that you work for that's in the insurance industry, you're going to understand that industry. So develop a circle of competence of things that you understand and try and stick with those companies. You want to buy businesses with intrinsic value characteristics and a durable competitive advantage. So if you're going to buy and hold a stock, which is what I do, you want to be able to keep that competitive advantage going. Okay, so you want to manage a management with a lot of integrity and talent. Charlie Munger says no assholes, which I think is pretty funny, because Warren wouldn't say that, but Charlie comes out with comments like that. No company is worth an infinite price. So the price has to be good. It has to make sense. And a lot of times companies, you have to realize, have to grow into maybe a price that's gotten a little bit ahead of itself. But if you watch a company every day and you follow it, and you zero in on your favorites, you got to have your favorites, and reassure yourself that your favorites are working out, and from there you'll be able to pick stocks.